You're watching today's video technical update presented by FX Times. It is Thursday, October 7th, 2010. I'm Fan Yang, your Forex market technician. I'll go over some developments in the Forex markets. The platform I'll be using for analysis is VT Trader. Tomorrow's non-farm payroll may be an event risk, so let's take a look at some US dollar crosses. The euro dollar is at an important resistance zone near 1.40. The pound dollar tested resistance at the 1.60 target. The US dollar Japanese yen continued lower than the intervention level. The Aussie dollar and the US dollar Canadian dollar pairs are testing important resistance and support zones respectively. Finally, gold has been seen to go up to 1365 and is now seeing early topping action after hitting this level. Let's take a look at these charts. This video is being produced at about 12 p.m. Eastern Time during the US trading session. I just want to lead in today's look at the markets with the US dollar index, which is forecasted by many analysts to go to around 75 area. There might be some support even at the 76 area, middle of this previous consolidation. But the market has yet to get there and is in a very sharp decline. So the US dollar is very weak ahead of this non-farm payroll. It would have to take a lot to reverse that the current trend. The euro dollar is right at where we anticipated this rally to be, around 1.40. We could start seeing, we anticipated resistance as early as 1.39, but there doesn't seem to be topping yet. In the 4-hour time frame, in the next 5 minutes, this candle is going to close, and there might be a very minor, short-term reversal. But until we break this channel, we are continuing this dollar weakness against the euro strength. So tomorrow, if the non-farm payroll, if the market does decline ahead of the non-farm payroll, during the non-farm payroll, I would basically look for the reaction after and see if the market is going to decline and break this channel support. I would look for that to go towards 1.3340 area, this 50% retracement area. Okay, so if the market breaks this after the non-farm payroll, look for the decline. If the market breaks before that, okay, and if the market actually, corrects very strongly right before the non-farm payroll, then I would be on the flip side. I would be looking for support, looking for the market to react the other way, to continue dollar weakness right after the non-farm payroll. So it depends what the market is doing right before. Pound dollar is also testing this important resistance here at 1.60. It was projected a little higher towards 1.6050 area, but we have this rejection right now. The market hasn't broken above 70 to show a breakout. So the pound is still weak, but the dollar is weaker. So I'll look for more choppiness here. But what I would do is monitor this area around the 1.58 area. If that area holds as support after the non-farm payroll, then there could be continuing pound dollar rally towards 1.6050 and perhaps even higher, as you see here. We've broken some important resistance levels, and this market can continue higher. Let's see if we use a Fibonacci from here. Okay, you notice that we are at this important resistance, but if we look at further dollar weakness, this market can continue higher towards 1.63 area. Same thing with the US dollar, euro dollar, which could continue higher even towards 1.45 area even. Okay, so there's still that dollar weakness bias. Dollar yen looks like it got to 82.50 as projected and continues lower. So dollar yen doesn't seem, it seems to have shed the fear of intervention as it tests. If it breaks below 82, even it would probably accelerate towards this all-time low just below 80. But tomorrow's non-farm payroll, if the market, I would prefer some type of correction ahead of the non-farm payroll and look for a decline after it. And as projected, the Aussie dollar is heading towards this parity level, and you see we have 138.2% expansion of this wave 1. So this wave 3 here expected to end around parity level here. So the Aussie dollar actually should be seeing some resistance, and in the 4-hour time frame we saw acceleration, and now it seems like it's developing a reversal kind of combination. So it's fitting that the market will become more choppy ahead of the non-farm payroll. So I'm looking for the market to establish resistance here. But if it doesn't establish resistance, then the market can very well break towards parity and even above it. Let me just switch to the weekly and just get rid of these Fibonacci levels for now. We're in the middle of a bullish wave, and if the market breaks above our current 0.99 resistance here, okay, after the non-farm payroll, then it could very well continue this rally, and I would give another projection here. Instead of a retracement to 100, we need to display some of these extended retracements as well, and these will point towards, you see right now is 138.2%. so this if it retraces up to 161.8, it would go to 1.02. So 1.02 would be my next target if the market breaks above 0.99. Of course, the parity level should be psychological resistance, so I would look for resistance there too. For the Aussie dollar, it's probably best to look at the market in channels. It's been channeling very well, and here we have a break above this current speed line. This is and we could extend this further now. So this isn't a clear break, but it's the market is clearing out this resistance area. Okay, so look for support. I'm looking basically for the reaction at this resistance zone. If the market cannot break above 0.99 and breaks below this rising support, we may have a correction towards, let's take a look at the daily now, towards this area, 0.92 area. 0.9250 area. Okay, so that's Aussie dollar. For US dollar, Canadian dollar, we're hitting a support level here. Okay, so ahead of the non-farm payroll, the market doesn't have enough clues to continue further. 4-hour time frame. So now it's breaking above this previous. You know what? A more important level right now for me is this level, right? And I would look for this market to continue higher towards this area ahead of the non-farm payroll. Look for it to sort of range, and then if the market breaks back above, I would look for the dollar Canadian to first go to the middle of this range around 1.04, 1.050, and then possibly test this resistance. But on the other hand, if it declines, it could continue further lower, and if you look at the weekly time frame, it can continue lower towards 0.95 area, or even 0.93 area in this 2007 low. And a quick look at gold as it hit our target here at 1365, and today has rejected a rally above that. But this could be just very temporary, as all the reversal signals have been during this rally. For our time frame, we see a very strong breakout in the RSI, and now we do have we have negative reversal signals. So continue to look for bottoming here above the 50 moving average in the 4-hour time frame, and the market breaks that after the non-farm payroll or before the non-farm payroll. Look for it to be supported after by the 200 moving average in the 4-hour time frame. And that wraps it up for today. Once again, I'm Fan Yang from FXTimes.com, wishing you good trading.